Alright, so welcome back, guys. So in this video we're going to be learning what happened in the forex markets on the 26th June. As at the time of this recording, this 27th, okay? So this is 26th June. So 26th June, the draw liquidity, the entry model I used, and how you can also replicate same. So on the 26th June, this is a candle, okay? So when we are looking at how this candle formed this bullish on DXY, you're going to be considering the previous candle on 25th, not necessarily 26th candle. The previous one is the most important in this case, okay? So because this one is as a result of reading the market without seeing the finished product of 26th candle. So if I go to the 4 hour, or first let's look at the daily. You see that we're in a bullish trend. These red lines are bullish trend. Break high, pull back, new high, pull back, new high, pull back. We just broke this high and we just pull back to this fair value gap. And on the daily charts, normally we are supposed to be heading to this high. That was normal logic, higher high, higher low method. Okay, don't complicate it. So what phase were we? We were in this kind of phase, and this was our destination. This is where we are, and we have been able to react from a point of interest known as fair value gap. So it's a simple idea. So if you go down to the 4 hours, because on the 4 hours you see a smaller trend that helps you to know when to enter and how to so these green lines you see my 4 hour trend. Okay, these green lines you see are my 4 hour trends, and as you can see, as at 26th June in the morning, which is around this candle, all of this candle have not printed around this candle. I figured out that this is going to be my draw. So even on the previous day, which is 25th, see what price did. Price broke this high, returned to an FVG. Now if you draw your fib from this low to this high, what happens is price entered this FVG but did not go discount, and a lot of people will be like, okay, price did not move to discount. Maybe on the 26th, price is going to move lower into this place, into this FVG. Okay, but the answer is no. Why is the answer no? This is the rule. When price enter a fair value gap, whether it's in discount, whether it's in premium, but as long as it mitigates it properly, when I mean mitigate it properly, or I think the best word here is rebalance it. Okay, whenever price enter that fair value gap, look at it. When you go to the lower time frame, if it actually fits with other PDRAs, which is other POIs, if it fits completely with it, then there's a high chance that the next day the market is going to deliver to the next previous high, which is this, instead of seeking this place. If while it entered this place, did not match its 1 hour point of interest, 15 minutes and 5 minutes, then on the 26th, price is expected to move lower, so my draw will be lower. As simple as that. But when it doesn't happen that way, rather it mitigates it and affects other time frames, give it a very precise support level. On the next day, your draw becomes this place. No point price coming back here. So if you look at, let's go to the 1 hour time frame. Let's verify what point of interest price mitigated at this point on these various time frames. So we look at the 1 hour chart. What is price mitigating here? There's another fair value gap here on the 1 hour chart, and you see price entered into it. Okay, so look at me, I'm verifying how strong that support level is, which is the fair value gap. On 15 minutes, there's another fair value gap here. The price mitigated properly, nicely. Okay, on the 5, you can see there's another fair value gap mitigated properly on the 5. So it means it's a very powerful area. Okay, so this made me have my draw liquidity to be above previous 4-hour high here. So that was it. Just I knew my draw liquidity was that. No stress, not too much thinking. So knowing my draw for 26 is there before 26 unfolding, knowing my draw is here, it means my draw is higher. My daily bias is what? Bullish. So what happens? Every other XSS USD pair daily bias is going to be bearish, and their draw liquidity is going to be lower. So let's go to Euro USD first. Okay, so this is Euro USD. If I shrink my chart, you're gonna see it properly. Okay, so if you look at the daily charts, where is Euro USD headed to? On the 26th, look at the 26th candle here. 26th candle was able to get to this low. If you check the structure on the daily, is this red lines you see it's red, pull back, drop, break the lows. We had a low, we break it, we had a low, and we're coming from this other block lower. Okay, so this particular day, 24th, was manipulative. Everybody thought on this day price is going to smash this lows, but it didn't. It retraced again, seeking liquidity, and now it was coming back down, and that was how we ran this low. Okay, so take your eyes off 27th candle, take your eyes off 26th candle, fix your eyes on 25th candle, because that's what you're going to be seeing before the 26th unveiled. So we know that we are on the way to this place because we are coming from other block. And why is this place marked very small like this? It's supposed to be marked big, isn't it? Throughout this candle, extend its right, but when you've been able to refine this other block from 4 hour, 1 hour 15, it's going to be smaller and have a very precise area that price is coming for. That's why it's this small. It has been refined to a smaller time frame. So we are on a journey to this place. It's easy to see. So on the 4 hour, we are able to see the internal structures, okay, which is these green lines you see. So we have this green, we break down here from this low, we later broke this low, we later flipped bullish. Now this area was the most confusing one. Flip bullish, everybody thinks we wanted to buy higher, but the truth is that's not the issue. If you draw your fib from here to here, you notice that on this day DXY was bullish, therefore that's why Euro USD crashed from here towards and had its draw liquidity to be this fair value gap and this other block. Okay, because DXY had a bullish bias on 25th. Now on 26th, DXY was having a bullish bias, and then Euro USD was in a bullish trend. Does that mean you should buy? Now in a case like this, you know your draw is lower. How would you know that? Now you would know that because DXY first is saying that it's going higher. 1, 2. This mitigation here, this mitigation that happened here on this other block of 4 hours, you know price is gonna take another low. Okay, you know that's gonna happen, and even the fact that an FVG here was mitigated is enough reason to know that price is gonna deliver lower. So after the mitigation here on 25th, this was a draw. On 26th, at the Asian session, which is like 2 a.m. Nigerian time, around that time, you'd know where your draw is, and we're at the premium level. So it's very simple. Price, when I woke up during the London session, it was clear that price is gonna hunt for this lows, it's gonna hunt for this low finally. but for the London at least this low, and then for the rest of the day most likely the final low. Okay, even knowing that I'm on a bullish trend, I still know where price is headed to. So sometimes you could be in a bullish trend like this, I'm saying, and DXY says it's bullish, and you're in a bullish trend on EU. There is no problem. All you have to know is that on EU, you're gonna be counter trading to a high value point of interest lower. That's why you have to analyze DXY, because somebody that did not analyze DXY and sees EU in this condition reacting from a POI here would want to buy it up from here. But when DXY is bullish, this would not hold and price will seek a lower POI, and that's when you look for sales with lower POI. And after that, the price are rejecting from the POI after the whole day's events and the whole day's trading. So when you come the next day and DXY still tells you it's going to go higher and it's bullish and the draw is higher, what tells you that mitigation price is going to fail that mitigation, because you are in the premium just again. People that do not check DXY will look to buy from this POI higher because this POI mitigated properly. But guess what? Because DXY is bullish, Euro USD will be what come to fail this mitigation, will come and run it here lower. When you come to the New York and you find out that here has been run and DXY is still pointing higher, DXY has broken out from its range and it's going higher to daily highs, the next lows price gonna attack is this lows. Now price gonna attack two kinds of areas: highs or lows and fair value gaps. Okay, so all those fair value gaps here, they're like magnets for price, and once price crosses here, DXY wants to still buy up. These becomes the next targets, and maybe this even the next targets. And that's what happened on Euro USD. Okay, so on the London on Euro USD, knowing that price is going to drop, what entry models do I need? There are three kinds of entry models I trade now. There were two before, but now it's three. Okay, so three. The first that I'll use in a bearish bias like this is AMD, and then we drop. This is my Asia range. This is my Asia range, price range above, and then drop. Or if this is my Asian range, price runs a high in the range away from market structure shifts, it turns back to LVG and drop. Where is the LVG gonna be? Somewhere around here. And where is the sweep gonna be? Something like this. Something like this. Okay. And this is my Asian range. Okay. Now these are the two that I most likely use, but I discovered one that occurs very often too. If your draw is lower, for instance, let's assume your draw is lower, your draw liquidity you're trading towards is lower, and you start seeing the Asian session is giving you this kind of vibes. Okay, it's dropping, your Asian range is like dropping. What happens is when London opens 7 a.m. Nigerian time, London Q zone open, what happens is price will seek any open fair value gap. If there is no fair value gap, and other block that if you refine to the 5 minutes, it's a fair value gap for the 5 minutes, price is going to what? Drop from there to your draw. Literally watch the pattern. If your Asian range is trending lower towards that draw, this will happen. AMD most likely, I know you'll be scared that what if price sweeps. Now AMD most likely happens if your draw is lower. For instance, AMD most likely happens when your draw is lower and the Asian session is facing higher. Okay, so it will be very easy for price from here to run Asian high and then drop. Okay, it will be very easy when it's far from this. But when it's very close, the FVG mitigation is just going to be the best. They didn't play out in London in EU, but in other pairs, SSS USD pairs, they played out and played out in New York on EU. I took the New York sales. Okay, so let's look at how it is on the 15 minute gap entry. I know my chart is just colorful, so many gray things everywhere. But I'll delete some so I can understand what I was doing. It becomes very neat. Okay, so this is my London. This blue place is my London. Okay, this yellow place is Asian, and the pink is New York. So this is Asian, this is London, this is New York. So like I said, if my draw was down, which is this low marked in blue, so this is my Asian, and look how price is trending lower. Okay, facing here on the Asian. So when London opens, you don't expect London to shoot up. It can happen if there is a London news, okay, Euro news in London session. But most likely, if this kind of thing happens, this fair value gap is where you need to get in. But you have to refine it to the 5 minutes to find out if this fair value gap is useful. On the 5 minutes, you find out that that place has been mitigated as a fair value gap. On 5 minutes, it's a fair value gap that has been used, so the chances of price coming there is low. So you'd see something like an order block that formed later around here. Look at it, and once London open, price entered into it might look scary to you, but that order block, if you refine it to the 5 minutes, around 5 minutes, it does not still look good. So that's why I just avoided it. But there are times when this other blocks is going to have 5 minutes fair value gap inside, and then you take a trade from there. But I did not. I was wanting price to come back to here or something, but then it didn't. It was just straight up. So I waited for the New York, and the New York showed that DXY was going to pull up higher, and I knew price going to come for these lows and this daily low is red. So on the New York, the same entry model I'm telling you about. Look at my London. My London was slopey towards here. So there was a big open fair value gap here. If you refine it to the 5 minutes, you're gonna see that it carries multiple fair value gaps, especially this one, not this, okay? Because this was mitigated a bit, so I like using a fresh one. So that was it. Though I actually entered too early because of FOMO, but this was supposed to be my best entry. I had to match with 5 minutes, and you put your stops here. Don't be scared of anything happening when that price running. If you hit your stop loss, you can still wait for the AMD to happen. So price entered this fair value gap, and then price delivered all the way down. I took a 2R on this, but with this better entry, it's gonna be showing you 3R. So that will happen on EU, and I don't make the video too long. GBP USD was the best to trade in terms of where you would have entered on London session. Okay, so GBP USD had a bearish trend, and before during the Asian, before the London played out, we are sitting in the premium, which makes it much more reasonable to start looking for sales to these lows more than even EU, since EU had a bullish dealing range initially. So around the London, what entry are you gonna make use of? Okay, so see around here, I was expecting price to run here so much, because it was not really moving down, it was in this premium, and I expect price to sweep, but it did not happen. So ignore the London, but in the New York, look at the London was facing down, so the New York will most likely return to this place. If you find it to the 5 minutes, you see that place is a fair value gap here. Look at it. So you take your trade off there. I didn't take the trade though. I didn't even notice. I was focused on EU. You take that trade there, put your stops here, and that's it. Just hold to the low, get your 3R, and that's it. Very easy and simple to replicate. If you found this video helpful, drop a comment. If you find it on YouTube, subscribe to the channel. Peace out, guys.